The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
And joining me on the Weekend Podcast, it's Paddy. Take a bow, Pad. It's Pete. Yeah, take a bow, Pete. And Breakeven Steven. Take a bow, Steve. Take a bow. You all lads?
Yeah, Steve's not here, mate. We've been talking about this all day.
All right, sorry, he's not here. So yes,
Right.
Steve's not here. Sorry. Steve today is going on a date with a lovely young man called Brian. And so he's very busy.
Right.
So he got him on the old Grinder, I think, or the Tinder, or one of those two. Is that still
Right.
going? Are those things still going? Because they were very popular at one point, weren't they? Tinder and Grindr and all that. Are they still up there?
I wouldn't know. I think so, probably.
I think Bumble's the way forward now. It's a very progressive company, isn't it? Ladies first. Ladies have to choose you. Do you see that lady? Very inspiring story, by the way. But do you know what? There's a positive thing to come out of camping. You know, I hate camping.
Yes.
A very positive thing has come out of it.
Hang on, what's happened there? There's been a detour. There's been a little U-turn there. What are you talking? What's happened?
Yeah.
There's a tangent.
A positive thing has come out of camping. I caught COVID.
Right.
Yes. So what happens is, I'm supposed to go camping this weekend. I can't because I caught COVID. That's the best thing to come out of camping since I've started camping. I caught COVID. I can't go camping. Yay!
Have you kept the positive test for use at later dates as well? Look, positive again.
Yes.
No,
And
can't
so
go camping.
I tell you what I'm doing, though, Pat. I don't know if you have this. I don't know if you're both getting tested, but I'm still getting tested by the ONS. But we have to do, and you get vouchers for it. We have to do the nasal and the back of the throat thing, but also the blood squeeze of your finger. You prick your finger with the blood thing. I can't do
Takes
it.
forever, doesn't it?
I was milking my finger today for like an hour and a half, and then lady in the end said, I've got to go. I've got other things to go. I said, hang on, I want to get my 50 quid voucher. And literally, I ended up going in the drawer, getting knives out, trying to cut. I couldn't get any blood out of me. I don't think I've got any blood in me.
You're pricking your finger and no blood was coming out?
No, I'm just running on gas or something.
It is quite hard, to be fair. It's quite difficult to get enough.
You wouldn't believe I was in the
Yeah.
I was in the kitchen, right?
You've got to get it's 25
4
millilitres,
pints.
so it's
4 pints, yeah.
It's like a thimble's worth of blood. Takes a long time.
I was in the kitchen today. Do you know what I did? I literally had my arm up to my elbow in hot water. I was jogging at the same time to get the blood, the heart pumping, and I did that for like 5 minutes. I
had a heart attack.
I asked her for more of those things that prick your finger. I said, can you have 2 more of those, please? And literally I went through 4 of them. I couldn't get any blood out. Megan was laughing. I was just getting really annoyed. I said, shut up, what are you laughing at? I said, I don't understand what's going on here.
See, a woman comes to your house and does this?
No, she sits outside or stands outside, but they give you the stuff, and you go inside. And So literally, I'm milking my finger to get blood out, and I couldn't get out. Megan filled hers in like 2 minutes. There's something wrong with me, circulation. I don't know what's going on there. I couldn't get anything out.
Yeah.
It's because you were close to death.
Yeah. So in the end, I shot a bird in the garden, just drained it of blood and put it in there.
Just send them any blood. They'd just get some liver out the fridge and just drain a bit.
Yeah. So anyway, lads.
Slit your wrists.
But no, I wouldn't do that. It's not worth a £50 voucher to kill yourself. Is it really?
I see. No,
I couldn't take the benefit of that then, could I? Of the voucher. But I was close to. Thoughts on the market this week, boys? Anything happening? Do you see it thawing a bit? I see it thawing a little bit. Do you escape hunts? I did a nice bit of a rally off the back of Friday there. And
yes,
this is the last full week of August. You see, the summer month, the summer sort of, that tumbleweed that rolls away. That's it. All of a sudden now, it's like the green shoots start popping up. The market has come back. All the rich city boys who've been away for summer moved about south of France and don't trade over summer. No, go away, mate. Came back St. Legendary Day. Yes, St. Legendary Day this year is on 9/11.
Oh, is it? Okay.
Yeah, so it's not really good.
So a Saturday when the markets are closed.
Yeah, we are. But I think it'll rally towards that. Of course, everything rallies towards something. The anticipation, that's part of the market. That's how it works, by the way. So I'm really bullish now at the moment, because if you look at my high 5 conviction stocks, there's lots of things going on in the last quarter. Polarean, FDA approval coming up. We're literally nearly just a month away from that. And the stock, it's funny how sentiment changes when the stock goes down. Some of the people in the Sharepickers Investment Club Disco group started worrying because there was a big sort of trade going through. It looks like a sell. You couldn't really tell. It's like a 900 grand. Why are they selling right now? It starts to worry people. The split price goes down. Hang on a second. You start to think about things that are not happening. Like no one knows. First of all, foremost, there's a high probability chance of them passing this for several reasons. Already the text in use, it'll help people beyond what they've got out there at the moment. It's very much needed. The collaboration with the FDA to design the trials and the application, all that stuff is all in their favour, But yet, the share price goes down, it doesn't sort of react to what people want, and people change their thinking on something. We've had this before, Don't worry about the share price. You can't control that at all. And I don't mind if it doesn't rally, because it's going to be a good business. It doesn't matter to the FDA. But no one knows the answer to the FDA yet. The answer hasn't been delivered. So, and if people are selling on insider information, that's highly illegal, but the information isn't there. So 99.999% of the time, people sell for their own reasons. I'm talking about institutions as well. And you often find institutions will sell based on nothing but internal management changes or their own thoughts or nothing to do with the business. Nothing. Yeah. Especially
it'd be quite nice if it rallied, though, wouldn't it?
Yeah, it'd be nice, yeah.
I mean, that was part of the thought process in terms of buying the shares early, wasn't it, rather than waiting for the FDA approval?
Well, I don't know. I've been early. I've had them 2 years now, haven't we? That's quite
yeah. But if we're saying that we're not worried about the FDA approval and we're just going to sit there and wait, then we could have bought them any time. We were sort of hoping for there to be a sort of uplift, weren't we?
Yeah, but I part of me doesn't want that to happen because you get a sell-off then. Like we said, Pat, you were one of the ones who said before, I don't really want share prices going nuts, bananas.
I've changed my mind on that. I'd quite like
because it just encourages little dirty traders to just say, quick, I'm going to take my 10%. Quick, sell.
But it's an interesting point that if it doesn't skyrocket, people are disappointed, I'll sell. And so you could see a drop because people are expecting.
Well, they are thick as pig do, if they are. Because we're talking about an amazing business here that's globally relevant. Massive potential.
But that's a fair comment, isn't it? That could happen.
But if you're selling on decisions...
I thought it would be £1.50 overnight once they got the FDA. And it's like, no, it might not be. Might not do that. And so people go, it's only got to 90p, right, I'm selling. And that's not the thing. It's about the next 2, 3, 4 years, isn't it?
Yeah. I'd say people need to rethink their thought process then, because you've got to look at the business really, and they will if they get what the FDA approval means is they can commercialize this business. That then becomes a very good business. So you hold on, and we're nowhere near earning sort of profit or revenue yet, and in the amounts they can, and that's it. Do you know what? Waiting for one-off decisions is not a good way to invest. And in fact, I don't know if you saw this. Let me get it up. It's a very sad post on one of the bulletin boards.
I did see that, about helium.
This was about that company we talked about, I had a joke about sort of 2 weeks ago about it, discovering helium, and we're doing high-pitched voices and all that stuff. And I don't know if this is true, this post, or not. I don't know if it's fake, because I've seen a couple of these. But this, the ending is a sad story. It was on a bulletin board, and it said, recalculated how much times I topped up and put into HE1 and took the loss of 57k, bought at 22 pence, sold at 5 pence a day, and it dropped due to sheer panic. Post regarding the SP dropping to 2-3 pence. From 65k, I got back 8k. Good luck, I'm out. Maybe out of this world too. I hope he means this oil and gas investment world, not generally the world. But
no.
Thanks to the rampers who said bounce is coming, heavy pumping on Twitter, the likes of some I've named there, yet to realise he wasn't holding, who knows. Others on LSE, 50 pence on Discovery. That's the problem, see. People are given these random price targets. All I can shed is tears, what dreams that have been shattered, lives destroyed of many, entire life savings vanished in a blink of an eye, anticipating the gains. Now dreams have become a false reality. Reality is those who are buying now will regret it in a week's time. This will be back to 5 pence. No helium, the end. And that's it. Basing all your hopes. It's a really sad post, right? Like a guy there who lost a lot of money there. And I said all the time, what's sad is people start wanting to get rich overnight quickly, and it doesn't happen. And I say, in my mind, people equate high risk with high reward. And I've seen more fails at the, drill ONG stocks than I've seen successes over time. Every time. I can't remember a decent success at all. And yet, new investors continually get sucked into them and put way too much. They do two things wrong. It's not investment, it's a gamble. And it's also an odds against gamble. So it's a horse race gamble. And they put way too much into them. And I point this out in my first lesson on lessons I've learned. Avoid O&G stocks, oil and gas stocks. It's not the way to get rich, quite the opposite. I mean, the object of this game is to find companies with big reward with as little risk as possible. And like I said, so some new traders and investors think because it's high risk, it's high reward. Usually with O&G, the odds are so bad, it's just high risk. That's it. I can't remember the last time I saw a successful wild drill or oil and gas discovery. Why do people keep putting money into them? It's insane. It's like it's basically like a Ponzi scheme. It's nuts. I don't understand it.
There's something attractive about the fact that it's a tangible asset, isn't there? So there is a thing that's there to be found, and that if they're the company that find the thing, then they're going to get rich. So
it's like prospectors. Yeah, exactly. Back in the day, panning for gold. It's the same, It's the,
but you know what?
Something in the human psyche, isn't it?
Yeah, but do you know what? The thing with this, and in fact, I did just a video on Gfinity. And it's the same there. It's the gold. The rush for gold. Most of the people did not find gold. Most people went on skint, bankrupt, even worse off than they went there with. The people that made money were the people that supplied the picks and shovels to the gold prospectors. These people they really made money. And I said that about, in fact, the video about Gfinity. I said, there's lots of people saying, why didn't Gfinity do Twitch, or Twitch sort of videos for the esports? I said, they're not an esports team. That's where everyone thinks it's going to get rich. But no, it's the people providing the picks and shovels to the big brands who want to get into esports. That's where the recurring money is made, and that's what they do, And so, and as well, they've got the media as well. But yeah, I don't know. It's really sad. But oil and gas, avoid it. You're not going to get rich with oil and gas.
But also overexposed. Well, I don't know in that case that he's 65 grand. What percentage of your portfolio? But by the sounds, it's probably
seems life savings. He said.
Well, exactly. It seems like it's a big chunk. So. That's a pretty sad story, and a lesson in not overexposing. Even when you got Polarean and you sort of go, all right, let's just do it. Let's go 70-80% of my portfolio because it's nailed on. It's all going to happen, and don't be surprised if the unexpected happens and things don't turn out quite how we're hoping. But hopefully,
as you say there, right? But nothing's a no-brainer. No investment's a no-brainer. Yeah. If you think that, you've got no brain and you haven't used it.
What is the likelihood of them, or what's the speed rather, in terms of the pickup of potential orders and all the rest of it once they've got FDA approval? Is there any any evidence of that? I haven't really seen that.
Yes, there is. Yes.
Oh, okay. Is it an order book that we can see? Is there?
Can you tell us what it is?
Yes. Let me have a look. In fact, I've got it here. Let me just. It's sort of the broker note. So the broker note, I discovered why it was so. I didn't realise at the time, but the broker note was quite conservative, I thought.
But that's a few months ago.
Yeah, I know, but this is May 2021. Yeah, but they do plan with the company, and I realised the broker note was quite conservative. And I realised why it was, and of course it was based on 2% market penetration of the US. That's all. So they 2%? Are you nuts? I mean, even Richard, who's literally, I'm trying to tell him, ramp it a bit, Richard. He won't ramp it. He will not ramp it. For heaven's sake, Richard, can you ramp it a bit more this time you have the podcast? And but he's very measured, and he never gives us sound bites. But even he, says he said it was conservative. Yes, it was, but they've got to do that, you see, because there's a big valuation point. But let's look here. So let me scroll down.
Bloody conservatives, they get everywhere, don't they?
Yeah, exactly. In fact, you know what's funny? Paddy asked me to search through WhatsApp for something, and I searched on your names, and all I could see was you mentioned the Conservatives loads of times.
It's obsessed. You probably do mention the Conservatives at least 10 times a week.
They're the root of all evil, so,
So here we are, look at this then. Look at this for, since there's 2% of America, right? Of America. United States of America.
2%, what does that mean? 2% of hospitals?
2%, yeah, of the potential market there of the hospitals. Yeah. So 2021, 2.5 million revenue, of course not commercialised yet. 2022, that'll go up to 11.3 million, right? Then 2023.
Yeah, but is that based on an order book?
Yeah, it's based on an order book. Well, no, they can't order. They can't have orders. But of course.
Well, that's what I mean.
Let me explain. Let me explain, Peter, please.
Oh, please do, Justin.
What they're going for, you've got the market lead, the research institutes are the hospitals in America with the big budgets. They do in-depth research. They publish papers. They've got the best doctors, the high flyers, all there. They are the pioneers in using this tech. So they know Polarean, even though not as I'm just saying this, they can't say they've got orders, not allowed to. It's not commercial until it goes like trying to sell a drug before it passes phase 3 in FDA. You can't do that. But of course, they've done some market feelers. They've sat down with all these people in these hospitals because they've sold machines to them, the research departments. So they know the level of demand there. And Richard even said to me, we've got lots of people saying, come on, hurry up, why is it taking so long? And we need FDA approval and that stuff. So they've got pent-up demand, wanting these machines. So based on that, and it's very conservative, this, though. This is like 2%. They're going to do a lot more than that. So anyway, this is what they say the revenue is. 2.5, then 11.3 million, 2022. 23.4, almost doubling, 2023, 31.8, 45 million next year, 62 next million, 85 million next year, 112 million next year, 145 million next year, 167 million in 2030. That's just in America, 2% penetration success rate there. So it's very conservative, but that's phenomenal growth. You're talking like 350% first year, 108% next year, 36%, 40%. Yeah, so it's big, all double digit, above 30% all the way across.
And the FDA approval is the tap that needs turning to unleash all of that, basically, is it?
Because the phase, it goes through phase 1, 2, 3 trials first of all, and that essentially says it's safe. It's effective, it's safe, but then the FDA have to review all that data. And then say, let me just check the homework. You're marking your own homework, but it's not marked by your own homework. It's independent of trials anyway. But they are also because the FDA, I didn't realize it. The FDA came about pretty much because of that drug. What was the drug that people give to pregnant ladies who are sick? And thalidomide.
Thalidomide.
Yeah, that was marketed around the world pretty much before any kind of proper independent safety stuff. And then it nearly got marketed in America. They said, whoa, hang on a sec, there's people being born with deformities in the rest of the world here. And so the FDA became the standard. And they said, right, and that's why that was put in place. So whenever someone says, but look at, I heard this argument about the vaccination. Said, yes, but look what's happening, how fast they're approving this. And it'll be like the thalidomide. I said, no, the FDA came about because of that. So, that won't happen again because of thalidomide, it just has to go, checks and balances, crossing the I's, dot the T's, dot the I's, cross the T's. Don't do that. We found you've actually, you dotted a T and crossed an I. You're going to have to send you back the review of the paper.
And then the only other limiting factor will be the actual production of the machines themselves and all of that, isn't it? To actually,
I had Rich on the podcast. He said,
deployment of.
No, it's not a hard thing. I mean, we have manufacturers ready to go with this. It's not because we're not talking about millions of machines in 1 year. You're talking even off each one of these machines that you get. So literally to generate, in the first year 11 million of revenue. You're not talking millions of machines there. That's how many machines are that? That's 24 machines. So total by first year 24 polarizers. They do that easy in what's that? It's like that's roughly 2 a month, if I got my maths correct.
Are you asking?
Yeah, I'm just. But Pete's normally the maths guy confirming
cool.
that.
I felt like I was at school again then for a second. Oh, God, I haven't been listening to teacher. What was the question?
They're going to do 24 polarizers in 2022, 48 in 2023, 74 in 2024. So it's a ramp up. But I mean, I think 24 polarizers in a year is not hard. They can do that easy.
Depends what a polarizer is, doesn't it really?
Yeah. Well, Steve could probably knock one of those up.
No, but
And you could, you could be your hands.
I know that there's gas involved.
Yeah.
I know that there's an MRI scanner involved. I'm guessing they're not making the MRI scanner. Like, what is it?
No, it's not the MRI. Well, if you've looked at my videos, I've shown you pictures of them, but you can see it on the website. It's basically, it's not an MRI scanner. It's in addition to that. So,
so then they're not making that bit. They're just making the addition. It's a software as well. There's the hardware, the polarizer. The polarizer is a xenon gas, so it makes it, and then you basically put it in a little bag. You suck it in. You go in the MRI and you hold your breath for 11 seconds. Then they take an image of you, and their system then helps. So it's a bag.
Well, no, the machine is not. Basically, they create that xenon gas via their polarizer. It's tested by the machine to make sure that it's all okay. The xenon gas is all fine. You breathe it in, comes out, then it's analysed then on their software as well, which brings out.
So it's like a bong.
It's a bit like a bong, yeah.
Yeah, that's it, Pad. Yeah.
It's like a space age bag. It looks like little sort of
bong,
these
and a carrier bag.
Yeah, but it's a bong and a carrier bag. It doesn't look quite impressive. No, but have you seen these? Have you ever seen space astronauts' food? It's like wrapped in these silver plastic sort of hermetically sealed vacuum packed things. It's the bag's a bit like that, but blown up a little bit. So they're these silvery bags, but no, they're highly tested. So they're polarized, quality checked. To make sure they're all good and fine, and then but the machines are like I suppose like a cabinet. Imagine a sort of a white cabinet, but waist height, and then it's got these 3 or 4 big loops on the top, like round hoops. I think the xenon goes around that, and that's as it's polarized, magnetically polarized. I don't know the technicalities of it, but
so it's a bong, a silver carrier bag, and a magnet.
Yeah, but it's a bit snazzier than that. But
I'm just thinking out loud in terms of how long it actually take to create one of these things. Like, presumably, if they've got the orders, you just order the bits and then somebody puts them together, right?
Yeah, it's not hard to. It's basically that's what we said. The individual bits can be ordered off the rack, pretty much. They're not, but it's the putting together and
the IP is software and
the software and the putting it all together and then what do you call sort of not categorizing when you sort of get all the measurements right and all that stuff and they've got a secret formula from, I don't know, and then they got the secret formula and it's locked away in a cave in Massachusetts.
So 2% of hospitals in America, but that's conservative.
Yeah. Yeah, because Richard said, well, no, think about it in reality. If you want to find out, like we've said this many times, if you want to find out what's wrong with people's lungs, you've got to get the best tech. Now,
not all hospitals want to look in people's lungs, do they?
No. But I mean, even if you talk about the top 100 institutions in America, when there's 1,100 of them, and Richard said eventually polarizers will be in every hospital, every major hospital in the world, and you're talking about 50,000 MRIs in the world. Potentially, so this could be an ad to every one of those, but we're talking literally 100, so it's literally nothing, so it could be the conservative. The note is very conservative, so the potential.
But massive. The share price movement in the coming weeks is going to be interesting to watch, and then as and when the FDA approval hopefully comes through. It's interesting, isn't it? Because you're thinking now could be a good buying opportunity, but equally, like I say, it might not absolutely skyrocket, and you might be disappointed. You might see a bit of selling going on the news.
This is what I think. Okay,
looking further down the line, though, if once you've got FDA approval, like you put in the numbers like that, you're like, it's actually a good. Once you've got FDA approval, that's a buying opportunity as well, isn't it?
Yeah. Calibrate. That's what I was looking for. You can put it all together, calibrate all the systems.
Yes.
So no, this is what I think. A lot of institutions, right, will not invest in a almost a pre-revenue company, but especially with a drug device that's not FDA approved, because that's risk for them. They don't need that. They're happy to pay a premium a year down the line, or even after commercialization. They're happy for that because they know the risk is taken out. What's the risk then? The risk is greatly reduced once they get FDA approval. I think some big money will come in. I think some funds will start buying. So unlike last time, where they needed funds after the phase 3, you never knew that, it sold off. And there wasn't any commerciality straight after that anyway. It was just FDA, just phase 3, passed, done. So they needed more funds to get to the FDA. They got those funds now. They got enough funds now to take this to commerciality. They don't need to raise many more funds. So, if anything, I think we'll see some funds buying in here because medtech is very hot. And when you're talking about a cutting-edge science like this that will, can pick up long COVID where MRI scanners and CT scans can't, I think we could see a surprise influx of investors, big, deep-pocketed investors, deep pockets investors with long arms as well. Not short arms because they can't reach the bottom of their pockets. Yeah,
right. Okay.
I hate it when you buy trousers and they haven't got big pockets.
Yeah, I got a. Yeah, my mother, Megan bought me what's it called? A body warmer. Because I hate
a gilet.
Gilet.
Oh, sorry, that's the new term.
You're probably gilet age, aren't you?
Yes.
No, but a body warmer. I got one already. I got
warmer.
Yeah, but because one thing I hate is having warm arms.
Yeah.
Okay. Right.
I love my arms nice and cold, but it's a body warm, yeah? Who ever thought of that? I hate warm arms. Why can't someone invent something that keeps my body warm, keeps my arms nice and cool?
I'm the opposite. I hate wearing a gilet and it gets cold and your arms are cold.
That's what I'm saying. I hate that. No, but sometimes, at the moment, I take the dog for a walk in the morning.
The opposite.
No, I'm joking. That's what I'm saying. Right. I'm saying, one of the things, products, for example, was there ever a gap in the market? I'm sure is it guys that work in the lumber trade, I suppose, that needs their arms free to do stuff, I suppose, and their body needs to be kept warm. Maybe their arms are hot because I don't know what it was. Where was the gap in the market for someone? I mean, how many people were saying to manufacturers, I love my arms cold.
Yeah, okay,
I want my body warm. That's it. Nothing else.
I'm with you. Yes.
I never saw a gap in the market for that. But in the mornings at the moment, it's just that time. Say about 7 o'clock in the morning, I walk the dog just before RNSs. It's a little bit, it can make it a little chilly, just T-shirt. So I put the body warmer on. But anyway, the pockets, the one, don't tell Megan this. I haven't worn the new one she bought me. Because the pockets are at the wrong angle.
Okay.
They're not very deep. My iPhone, if I bend down to pick up some poo or something, not my poo, the dog's poo.
Oh, not yours.
No, when I'm walking, I tend to do mine in the house still. I don't want to bend down, my phone fall out, and I'm in dog poo, because that's not good. No, just to mention that. Megan doesn't know. Anyway, so I haven't...
So go back to deep pockets.
Yeah, so Megan keeps saying, why haven't you worn your new gilet? Oh, right. I didn't see it. Where is it? And the thing, I don't want to upset him by saying, it's rubbish. The pockets are rubbish.
Right.
Because that's why it's a nice one, but it's good make.
And that's what I
don't know. We're trying to...
Deep-pocketed institutions.
Yeah, that's it. Yeah.
Right,
yeah, that's it. Yeah. So we went off track there a little bit.
Did we?
Yeah. Anyway, so
do you reckon they just get bought out as soon as it happens by another medical?
Well, that's some people are worrying about that. I don't think so. Richard said, "No, we're not going to." On the podcast, he said, "No, we're not. We're taking this all the way. We're not going to." They've got. You've got to say that, yes. But I mean, I genuinely think he will. He's an honest fella. He's a nice guy. He really is.
Yeah. And, if another company comes in,
only if
the money's right, everyone will sell.
If they start, if an institution comes through the back door and start buying aggressive takeover, the share price will go nuts. There'll be no stock available, so it'll go up and up and up and up and up and up and up. But if they do, if they do it the proper way, like a gentleman, and say, we're very interested in your business and we'd like to make you an offer. But then it has to be accepted by, shareholders, board holders, all that stuff, and put to the board. So, and we can all say, no, Richard! So what price would you be happy at, for example, Pad, if they said, we've had an offer for the business, where we're at the moment, Gfinity, Polarean, is at 86.5 pence. If they came in...
You always said right at the start of this process, let me see if I can get up. Let's see if Harry and Larry wants to open today. You always said have an idea what your percentage is where you should be aiming and what you'd be happy with. So let me have a look and see where I am. I am...
This is a great podcast.
So let's say
this is how long it takes to get into the Harry and Larry podcast.
Harry and Larry podcast. What are you listening to their podcast for? Doing our podcast? What's wrong with you? But listen, let's say that, for example, the Bruce Forsyth Investment Fund approached.
Oh, right. Yeah.
Tell you what, Richard, we're going to give you an offer. Oh, listen now. It can be high, it can be low. I'm going to offer you £1 a share. What do you say? What do you say to that? Higher or lower?
No, I'd want more.
No, the game is higher or lower, but I want more, Pad. You know, the game show is I want more. Higher. Okay, I'll give you £1.50. £1.50. It's a good deal. All in. Take all your polarizers, all the people.
So I've basically doubled my money so far.
What do you want? £1.50 a share, Pad.
What should we be expecting?
Paddy, £1.50. I'm offering you a share.
As much as I can get. I don't.
Higher or no deal?
Yeah, at what point are we going to say lower?
Deal or no deal?
Sorry, but at what point are we going to say, oh, no, that's too much?
Okay, wrong game show. Deal or no deal?
Oh, right, okay, there we go.
£1.50, Peter. £1.50.
No deal.
No deal. Okay, £2. That's the last I'm going. £2.
No deal.
Okay, £2.50. It's the last. This is now the last I'm doing. All right.
You said that last time.
No, I didn't. I forgot. I meant £2. £2.50. £3. Not a penny more, a penny less. £4.
No,
that's it. That's a lot.
£4.
£4. Yes, that's it. All okay, done.
Yeah.
Right, lovely.
Yeah, go on then.
Lovely.
Yeah.
But no,
That's a 20 bagger from when we first bought it. So yeah.
Yes. But no, I don't know. I just think if you look at what it could be worth, it could be a FTSE 100 company. It could be worth billions. So I don't think they'll shortchange the company because they know the potential more than anyone. The board, and I don't see them going for a quick buck. You know.
No. Okay.
Anyway,
can we talk about Gfinity?
Yes, I've just done a video on that. Did you watch it?
I haven't watched it yet. I did see it come up on my phone, but I haven't watched it.
We're nearing. So October's the exciting month, right? So Polarean get their FDA news.
Yes.
Gfinity's warrants go.
Yeah, warrants. 20 million warrants left. So when you think about it, they do about 1.5 million in volume a day anyway. So, and that's a quiet day average. So and apparently. The warrant holder is a big holder, so it's quite sticky. So, and this is my thoughts on warrants and options. Actually, there's about 100 million, not there's about 20 million warrants left and 100 million options. So some of those options are from ex-employees. Now, this is my thought on warrants and options. If the share price is going down, people start cashing them in, you know, because a lot of these people now are not aligned to the business. They don't really care about it too much. They don't keep a watch on it. They don't think, okay, it's still doing well, it's getting better. Most people they see a drop in the share price, especially over the summer months, they'll just sell out, you know. When the share price is going up, I like anything, people don't sell. People do not sell when the share price is going up. So then once we start getting into some good news territory now, and the options expire, the share price is going up, I think we'll start getting a bit of momentum, and we see it bounce above that level. I think the fundraise is amazing at that price. Did you see that? Canaccord apparently, because that was the new broker, have come in on this. They've you'll see them taking. Now, when you see the broker itself, who wrote the broker note, and know what's happening here, taking a chunk, that's good news, and also not at a discount. You know, they said it was pretty much that on that day it sort of rose anyway, so it was around about market level. And other people said, "Oh, we wouldn't
and Chief Exec getting involved."
Yeah,
as well.
John chucked in 25k. So. I think, you know...
He's not Australian.
Yeah, no, I mean, no, but once it starts going up, I think... do you know what I'm saying? The psychology, that's all about the psychology of the market. People don't sell when the share price is rising because they think it's going to the moon. Yeah. People don't buy when the stock price is falling because they think it's going to the floor. So as long as you get some positive momentum in the stock, I think people will hold on as far as options. The biggest pressure happens when there's a sell-off generally and the share price is grinding lower. People tend to sell then, you know. You pee the bed brigade tend to sell. So as long as we get it going in the right direction, and like I said, we pass. What is it? 18th of October, I think, expiry of warrants. So that's less drag there. So but I think it's a very good deal. So 5 times revenue, 4 times profit. It's a profitable, website. And have you seen the biggest problem at the moment? I was watching CNBC and all this afternoon. They did a 10-minute segment on supply chain problems, not just in the UK, which is a big problem in the UK. And they're saying the biggest problem...
Yeah, due to Brexit.
Yeah, and the pandemic. And the pandemic was really like a rock, a big pebble being thrown into a pool there. So the stock markets took a massive bounce down. The Fed came in, started buying assets, and it bounced back up. But there's ripples, of course. Big ripples that come out from the pandemic. And inflation, supply chain fractures, all this is a problem. And that leads to what? Over Christmas, and already the supermarkets are saying we're going to have problems over Christmas, getting stock. And on top of that, you got the microchip shortage. And this website, basically all it does is gaming stuff, consoles, PlayStation. So if you want to find, the hot console for Christmas or whatever games, you're going to have to shop smart, and that's why Stock Informer comes in. And what's good about Stock Informer, it was growing. It's got 90% margins. But it's growing, it's profitable, and it's a one-man band. The guy's worked his backside off. He didn't do any advertising on the site, which, when you think about it, when you are looking to buy a console game, a well-placed advert on the side there, or sponsorship, works very well, because those people are really they're going to spend. They're about to spend. There's no adverts on the site. And then you can put adverts on all of GDM as well for Stock Informer, or products on there that'll feed into Stock Informer. It works very well, in the system. Because they've already got something called Stealth Optional Gfinity, which is very similar. They talk about deals, they do referral income and all that stuff. So, I took one of the videos, worth watching, the flywheel of growing monthly users, growing the value per user as well. At the moment, they're on close to 20 million users, and the value's gone up from 4 pence when they first started Gfinity Digital Media to now 15 pence. The model they have is what's it called, Future PLC, which is a multi-billion pound company that's grown doing this, growing websites organically, acquiring them, doing partnerships as well, and they've grown their user base and the value of those users, and they're at about 85 pence, or in fact they've said about £1 per user now they're going to get. But Gfinity have a goal of getting to 100 million users, initially 30 pence and 40 pence, so that's 40 million in revenue pretty much. And so I keep talking about Gfinity, it's a flywheel. It takes a lot to get it going from a base, from start. But once you get that user base and you start optimizing, you acquire, you optimize, you synergize, and you grow, the value of those users go up. It's like a twin engines of growth, And so it's not going to happen overnight. But it's happening. It's going in the right direction.
Oh, that famous saying, the twin engines of growth.
That well known.
Have you heard of that? Twin engines of growth.
Twin engines of growth. Yeah. So this guy goes around all the Argoses and sees whether they've got PlayStations. Is that right?
That's it. Yeah.
Have you watched the video? It's done. Do you know what? It's like if you look at it, unbelievably, there's no SEO, right? It's been the authority for 10 years. A guy called Mike Green run it, and he's had very little time. He's almost worked his backside off for like 10 years. Now he's going to pay off, but it's done very well for, like I said, high margins, growing revenue, and now they can invest in it. They can actually. Yeah. There's no. If you look at this, Stock Informer Twitter site, hardly any activity because he doesn't have time. He's a one-man band. Now Gfinity can put a team on it, send traffic from the social media sites to the site, advertise on the site, advertise that site through GDM. It just fits very nicely. So, and also in America, it's a US site as well, but only 17% of their revenue comes from America. But GDM's user base is more than 50% based in America. So straight away, they can, get a market there to grow straight away. So I say yay, Stock Informer, goodbye, good deal, yeah.
Well, on the face of it, it seemed like a pretty good deal. And at the end of the day, you're buying a profitable, growing business, and for a good price, and that complements the business that you're involved in. So it looks pretty good. And
check out the vid. I did 33 minutes of a video on that, on the intricacies of it all, and
the placing being at zero discount, or virtually no discount. Was encouraging as well. So
exactly, that's a quality too. That's when you get that says a lot, right? A lot of these crap AIM companies, they have to do discounts of 50%. Look at the companies who are involved in here, right? Escape and raise some money to acquire French and Brazil site and franchise site. Very little discount. Polarean again raised 25 million at 65 pence when it was back around that level. Very little discount. Gfinity now. Gfinity was a basket case. That was going to go through a couple of years ago. That's why they had to encourage people with warrants. Yeah. It was on its backside with the last management. Now, John has just raised more money than they did back then at little discount, no warrants whatsoever. The brokers come in. He's bought some. This is a mark of quality companies. My aim is to get a micro caps that will go towards mid caps, and all these companies I talk about here, Escapement, Biome, Trufin, Polarean, Gfinity, they all have that scalable potential. They're all quality companies in the making, and it's very hard. But all you got to do, they'll be volatile, of course they will. But all you got to do is sit there and just keep an eye on the news that they're heading in the right direction. And Gfinity is with this deal. It just adds. It's like the flywheel effect. It's a big, massive flywheel. To get it going takes a lot of energy. Once you start getting it going, it's hard to stop. But just keep adding to it slowly, speeding it up, until all of a sudden the momentum and energy is going like crazy. And you're chucking off revenue and cash like a monkey's uncle.
Like a twin engine.
Like a twin engine of growth.
Of growth.
If you look at Future, I went to the Future PLC, the graph on that, and literally they did the same thing back in 2015. They went from publications, real sort of paper print publications of hobbyist magazines, all this, and they started selling them all off and just going websites. And it stuck with niche, and their revenue went down from 2015 to 2016. Then all of a sudden it started going up. The margins became better, but the share price went sideways for a while, and all of a sudden it started taking off. In 2016, the end of 2016, when they did that, started that transformation, the share price was 114. Now it's £38.40. That's a 3,000% increase. And they've got all the sticky recurring revenue. And like two parts is GDM, which is the media business, and people don't know this, but the tech side, they've got proprietary technology. Basically, the Gfinity esports platform, they can go to companies now and say, we'll do your, anything you want, like Cadbury's or all these big people like BT or F1. If they want a presence in esports, which is getting bigger, let's be honest, more people want a presence in gaming and esports and all that. They go to Gfinity. Gfinity works with amazing names from Amazon to, like I said, Formula One, to all these big names. And they can now start charging that software as a service, which of course is recurring revenue. So they're not the big one-up fee payments before, and nothing else afterwards. They get now a fee, which is a bit less, but they get recurring software as a service revenue, which of course is a lot better, gives a lot more forward guidance easier. So it's just a better revenue model completely compared to the last guys who like to choose a big chunky fee up front, no margin in it. They're making a loss, spending lots of cash. Now it's recurring revenue, higher margin, and it's just transforming. Like I said, if you look at the chart there on their revenue, they got bar charts when they've different colours of different parts of the businesses. And previously, Gfinity Media, the digital media and the tech business weren't even there pretty much. And now they're going to be the biggest parts of that business going forward. And they're both recurring revenue and highly scalable, good margins. So it's going in the right direction. You know what I'm saying? Like it a lot.
Very good.
Yeah,
nice.
yeah.
I'm coming around to it. I've got to be honest. I wasn't sure. But yeah, this seems like a decent purchase, and yeah.
Well, if you look at Future, what they do is they do all these magazines that niche hobby stuff that's very good for targeted advertising. You get good value for it because it's trusted. Now Gfinity are doing the same. Like the NED, non-executive Future, is on the board also Gfinity, and he's saying this is the playbook, this is what you do. And they've got some good people in there, but Gfinity doing it in the esports gaming sector, which will be mainstream in a few years' time. There's
quite a few companies doing it. What's the other one? Is it Hut Group who do similar things with online fashion? So they basically gone around buying up lots of very different companies. Like they do one that's like My
Protein is
My Protein. Yeah, there's like a bicycle shop which they own. There's some beauty things they own. Yeah. They've got together all the logistics so that there's sort of a shared delivery and warehouse system. But then all these brands that look like they're completely separate just feed off that. And I don't know how much that's worth, but it's eye-watering. So
exactly. And they're all synergize. They've all together. Like you said, you can have someone now will come to them, a big brand will come and say, we want to spend sort of this amount across your network, and so you can give them. And once the bigger you get, the better it is. But I mean, especially if you're very focused on gaming and esports, because you see it all the time now. There's people saying, esports should be in the Olympics, but it's not going to get less popular. Esports and gaming, it's going to get bigger. And like I said, if you can give brands, sort of, a presence in this arena, and they can only, give you a sort of not only sort of, get that platform for you to get the game going. I mean, Cadbury's did it recently, didn't they, with Gfinity, where they had celebrities. It was like a bit like Gogglebox, but with gaming, So they had, Ashley Banjo and his mother or something gaming against each other, just with Cadbury's. They did all that for Cadbury's, So that's the kind of thing they get in front of younger viewers by doing that kind of thing, the brands. And Gfinity are the guys to put that on. And yet then they can sell you advertising across the entire, Gfinity digital media, websites. So they're not only put on the competitions, but it's sponsored, it's wrapped around all their websites, and they can deliver really targeted ads, So it's really, I think it's, like I said, it's like, I keep saying flywheel. And the reason why I say that is because there's a brilliant book out. There's a guy called Jim Collins called From Good to Great. And he talks about businesses. They're not only, they've gone from good businesses to great, outstanding businesses, like the Disneys, the Apples. And he says, why? And he talks about it's not one inflection point. It's several things that have happened along the way that managers have done. And you have to have this, you have to be a level 5 kind of manager to get to achieve this. And he talks about flywheels, basically, and the build-up of energy takes a while to get going. Once it's going there, all you can do is adding, and it gets, it exponentially grows. And I sent, he's on a podcast called, what's the podcast called? I mean, there's a lot of these podcasts at the moment. I'd highly recommend them. Let me just go on the Discord thing. The podcast is called We Study Billionaires, right? But they get some people, good people on there, excellent people. And they had Jim Collins on the other day. And oddly, I sent it to John. I said, I don't know if you. I said, you read business books and all that stuff. So I've listened to this guy, Jim Collins, and I also sent it to Richard. And they both heard of him. Said, "Oh, I love these books. Amazing." They both read his books. And that's encouraging, actually, because he goes through 7 reasons why companies go from good to great. And it's good to know that the CEOs of 2 companies you invested in know this guy, this writer, who's sold like 4 million of this business book, which is way above what business books do. But it's very good, and it's worth looking. But check that out. We Study Billionaires. Which one was this? And it was about it was episode 372. Jim Collins. Worth listening to. 45 minutes, but then you can go on and get his book if you want. But it's very, very good. Very good indeed.
Okay.
Yeah.
Thanks.
Yeah. What else? I want to say something else. Oh yeah, let's talk about Sierra Oscar 4. It's almost swearing, but we should talk about that, I think.
That salt's still there, isn't it?
Mm.
Yeah, because
someone's going to dig it up.
Yeah.
What do you mean? Salt Lake Potash?
Yeah.
Yeah, I feel sorry for the holders that have probably lost a lot of money there. If they've, Breakeven Steven is one of those, isn't he?
He's still not sold.
No, he's out now.
He's out now. Yeah, but he's taken the loss.
Oh, he took an arse kicking on that. A big, literally, he took an arse kicking. Got kicked out of a bar. Went run the back. Went back in the bar. Got kicked out again, pretty much.
Right. Yeah.
And they threw him back out and said, "Get out! We've banned you twice." And he went back in. They kicked him out again. So
I'm trying to remember if I lost anything with them. I probably did.
I did.
I did. I lost. Do you know what I said? I lost money. But do you know what I said about? I did my Share Pickers investment podcast on mistakes, and this is one of the things in there. I said, I've come a cropper. I posted this, by the way, on Discord. I said in the SO4 channel. I said, I've come a cropper on many a stock, and these mistakes happen less and get smaller if you choose to learn from them. And I sort of wrote down what I learned from this. And if you don't choose to learn from them, and you won't learn from them if you blame someone else, by the way. If you just randomly say, "Oh, you said that was a good investment, I invested, it's gone down," you'll never learn anything from doing that, ever. So this is the lesson I learned from this is never give any management of any company a second chance if they change the plan. So in my mind, the first red flag, these are red flags. There's 4 red flags here. The first red flag was they said they were fully funded for production. Then they did a fundraise. Okay, you've made a mistake once. Okay, that's the first red flag. That's the second red flag. I'm out. Second red flag came. They did another unplanned fundraise. Get out as fast as you can right there. And the third red flag. Third red flag came. Production timeline slipped. They're going to produce. I think it was March, something like that. Didn't happen. It dragged on. So third red flag. Fourth red flag. Production targets. The amount they're going to produce went down. And I said, be wary on the first red flag. Get out as fast as you can if a second red flag goes up in the air because the management won't change, so you have to. There's no one hanging in there hoping, and there's an old saying, hope is not an investment strategy. Just get out. Get out of it. Because there's plenty of opportunities out there with management who will stick to the plan. Business is never easy, but you can forgive one slip up because it may be genuinely outside your control. But the second time, no. Listen, that may be out their control, but do you know what? Move on. Honestly, it's not worth it. Not worth just hanging on in there. But so that took another beating. But Tony, the CEO, has resigned. They say, Thomas resigned. I think that was the thing, wasn't it? And then, the CFO went. That was another red flag, actually. CFO sneaked out the back door, didn't he?
That's never ideal, is it?
No. But the guy in charge of the money...
I lost some money. I was just going through all the purchases. I lost some money, but not very much.
Yeah.
So, that was a good escape.
Yeah, no, listen now, CEO or CFO, right? Those two are the most important roles, pretty much. If you're executive chairman, that's very important as well, but non-exec is not that. But CFO, CEO... If you're in charge of running the company as a CEO, or in charge of the money side of it, CEO, and you sneak out, sometimes it's fine. The CFO might be leaving for reasons, a better job or somewhere else. But if something's going wrong already and the CFO leaves, that happens at other companies. I think it's utility-wise for the CEO, just CFO just sneaked out or something else, and then they all of a sudden started falling apart. But that's often a red flag right there. So I didn't even put that in, but that was one of the red flags.
Yeah, because they know what's in the numbers, and if they're leaving, it's
but also
probably because it's not good.
Yeah, but the funding was messed up then because he messed the funding up, so they got rid of him. But
a massive dilution, wasn't it? So it was that's just no good. So you're
4p now. 4. Wow. Okay.
We're buying it like around 30p. I think I got out about 25p. So yeah.
Yeah, but someone asked me on the podcast about 3 weeks back. After it dropped initially, after the production's targets had dropped, and someone said, "Is it a buy now?" Because it dropped by 20%, and I said, "No."
But having said all that, I mean that salt is still there, right?
Yeah, but
someone's going to dig it up.
Yeah, but
they've got the rights to do it.
Yeah, but first of all, you don't know what money's needed to raise now. So they're suspended on ASX, which I don't understand because. They always do that on ASX, and in Australia they suspend when there's a fundraise happening, which is good because the share price can't drift. But they don't do that on AIM. So literally, the share price is dipping on AIM, expecting a fundraise to happen. The share price is going down. So then you've got people coming in, trying to raise money with them, and they say, "Well, hang on, the share price is keeping dropping in the UK, which is where most of the investors are holding." So.
They've got to tidy that up, haven't they? That's annoying.
Yeah.
Or is that a condition of their license that it has to be listed in Australia as well?
I don't know, maybe, yeah. I don't know.
But either way, it's really confusing and it's not helpful.
Yeah.
It's a bit mad, yeah.
And there's a reason why they can't, they have to change the rules of AIM, basically, but there's a reason why they can't suspend. Someone did say why, I explained it. I said, okay, it's not as easy as that than just suspending. In fact, Tony told me why. You have to, I don't know, you have to write something to the AIM and get agreement. I
remember we had the same conversation about Europa Metals when the similar thing happened, and we were saying, well, I mean, how low can it possibly go? Like, they have the rights to dig up something, whether or not it's actually there.
It can go bust in administration, and then people pick it up, out of the back of administration. That's when because then you're not liable for.
That's the time to buy it, isn't it?
Yeah, but it won't be listed then.
I'm out of this. I've got to be honest. This one is one of those ones which I was always a little bit sceptical about, and you really talked me into buying it. But it was always there was a question mark environmentally for me on it, and the whole dual listing thing confused the hell out of me. And
well, if you blame me, I'll blame you. Why didn't you knew my strategy? Why did you let me buy a resource company, for heaven's sake?
If you want to rewind the podcast back to wherever it was to 18 months ago, I think you'll have both me and Pete telling you it's a resource company and laughing at you for changing your strategy.
Okay, right. Okay.
Yeah.
Well, it's a resource
I remember
company.
that happening.
I thought at the time that the reason why I didn't like resource companies was because they were pre-revenue, but this was coming into revenue, of course. But then we realised it wasn't coming into revenue as fast as we thought, which is obviously the company's fault. But again, there's the problem with debt, and whenever a resource company has to start earning money, there's a lot of capital expenditure needed and then they have to raise debt, of course, to get the mine up, and to build all that infrastructure to get the mine, they have to take on a lot of debt. So then that's another filter of mine, well, debt is a big problem. So now I won't invest in any company with problem with debt. There's no point. You don't need to. There are plenty of other opportunities out there. So that will automatically cut me out of any resource stock anyway, because I won't look at pre-revenue or companies nowhere near profitability now, and I will not look at debt. So that cuts out resource companies, Pete, you still an arse holder?
Oh, absolutely, yeah. I love my arse.
What's going on with them, Pete? Give us an update.
Nothing's changed since last week, so listen to that podcast. But
yeah.
There's been some good buying activity this week, and we've seen a nice rise in the share price. We're knocking on the door of 3p. It pulled back a little bit on Friday after a nice rise on Friday, but it's
that was almost like a horse racing commentary of the share price. And it went for £3, and pulled back on the Thursday, Friday, and little gallons towards the end, and close the play at 4.3.
Yeah. But
that's what you should do. That's what you should do. For literally a horse racing comedy of the week's share price. And Monday starts out strong, pulls up to 5 pence, and then drops back a little bit towards the end of the day. And then it finishes on 4.3 for the end of the week. Good volume, though. Good volume.
That would be good. You should do that. But yes, they're just the whole new investment company that was announced last week. There seems to be a renewed momentum here. Let's see. Like I said last week, it's the next chapter, isn't it? So
I think they do. I do. They'll be cracking that with them. Oh, there's lots of ramping on Twitter. It seems to be doing well. The volume's gone up. The share price has gone with it. Oh, out comes a discounted placing. Oh, he's fallen to the third. Oh, dreadful. That was not expected. Outrageous. Yes. Outrageous behaviour by the management.
Sack the board.
Yeah. But do you know what? But seriously, I forgot to answer a question there. Someone asked me on the webinar after that big drop in SO4, and I just talked about the red flags, and this was on the webinar, and I said, why is the story changed? Explain why. And then someone said, is it a buy here? And I said, no, it's not a buy here. No, you listened to the last 5 minutes of what I said. And then, and I thought, if you want to, I see lots of people, this is a mistake people make, trying to catch falling knives. I've taken a little trade on that. Why? Do you want to make proper money or just pennies or what? Or just want to lose? I don't understand.
It's fun, isn't it? It's fun.
No, but let me say one thing, right? If a company has fallen, share price has fallen off a cliff because, operationally it's getting worse, right? Don't invest in it because what? It's not improving.
No.
Invest in improving business. That's one thing you'd have to look at. Is the business improving? And generally, if a stock has fallen by 50-odd% in one trading day, it's not. I can guarantee it's not. Yeah. Or even by 20% or whatever they are, or 25%. Is it improving? It may be a slight blip, but you've got to think, okay, over the next 12 months, will this be a better business? Or 6 months, 12 months? No, it's not improving. The reason why it's fallen is because it's taken a major knock to one of its operations or its plans. So
it's a good story for the lads, though, isn't it?
Yeah.
Yeah.
I suppose so, yeah. But I mean, I question people, I see on Twitter, thinking, are you, because I see, I've taken it for a trade, I think, are you just gambling for the sake of it because you like a gamble, or do you want to make money? Because if you want to make money, you're not going about it the right way. And I don't understand that. I really don't understand people, I've taken a few for a trade here on a company that's just fallen by 25%. Of it. That's not an improving business.
Yeah.
What's going on here?
But that's the madness of the market, and that's going back all the way to the start of this conversation about Polarean. The FDA should, in theory, if that comes through, that should then trigger, hopefully, a really nice uplift of the share price and onward momentum. But as we've seen it before, other people have different opinions, sell for whatever reason, and it actually, suppresses the share price.
Yeah, I can see if it's a temporary knock in if it's a delay in a business, fair enough. And the business is going to resume, it's fine. But if you're like drilling for oil and gas and you don't have any there, it's viable. Like I said, they often say it's happened a couple of times with oil companies I've talked to on the podcast, and they say, listen, this generally they won't come on the podcast after the duster, but they'll always give the impression that they're going to go back in there because it's down there. Oh yeah, it's hydrocarbons there, yeah. As yet, we haven't found it. We haven't got them out. They're not economically viable, but they're down there. Oh yes. Yes. It's like saying, do you know what? The lottery numbers? I picked 6, right? I didn't pick the winning ones, but they're in there. Those numbers, the winning numbers, are between 1 and 50. So they're in there somewhere.
Yeah.
Yeah, I know it, but the chance of you getting it is quite slim,
Yep.
Hello?
Oh,
One other thing, there's a crypto bubble going on. I mean, as you said today, when you see a 12-year-old boy from London making 290 grand selling what's it called?
NFTs.
Weird Whales NFTs. He makes 290 grand, Pad.
NFTs, blimey.
Pad.
What a load of rubbish.
You said you wanted a quick buck. NFTs.
No, I remember I've mentioned this about a year ago, and none really understood what it was. But as the more I see of these things, I'm still baffled. Like, this is rubbish. Why?
It's a bubble. People understand that. But NFTs could stand for the new fraud technique. It's literally, it's ridiculous.
It's Emperor's New Clothes. It's
yeah. And people don't see it because we're in a bubble. It's like this frenzied atmosphere of crypto. Last week I traded some crypto. Right, I made 60-odd% profit on a trade in crypto. Now I looked at the charts. I got a thing. I've cashed out now. My Coinbase account's up 190%. There's huge liquidity in crypto. You can trade on the second, on the minute charts. Every bar is populated because there's volume every second. It's amazing. Amy, you haven't even got that. But I don't for 1 second believe we're not in a bubble here. This is the internet bubble. Exactly the same as, do you remember back in the internet days when companies were massively, .com bubble, the companies were massively overvalued, but they were justifying it because the internet was the future. Yeah, it is the future, but not all companies will be the future of the internet. It'll be a handful, and that's it. But what's going to happen in the meantime, it'll blow up. It will blow up. I guarantee it'll blow up. I don't know when. Bubbles go on for longer than we think, but it's good to trade it for a bit of fun. But for now, don't convince yourself you can pick a winner right here now, because it is like picking Amazon in the .com boom when even people worked in Amazon thought it was going bust. So I just think it's crazy. It's crazy. It's literally these companies. Like I said, they're worth billions. They got no revenue, nothing. How does that work then? How does that? I mean, people are different because it's decentralized. How is it? So if those people want to raise,
at least with currency, there's the opportunity to resell it. With the NFTs, people are buying the art that people are buying on that is terrible. Like it's absolutely, it's not even good art. So the chance that you're going to be able to resell that in the future, when the shine comes off this whole marketplace, it's crazy.
So I don't understand the value of that. I don't like that shark thing. I don't understand why that. I don't know how that kid's made 290 grand. I don't get that.
Do you remember you won't remember it, but the Tulip Mania, that was what it's called.
Yes, I remember that.
The first sort of bubble, the Dutch Golden Age, when people were paying ridiculous amounts for tulips, you know. Now someone sold an NFT tulip, which I thought was quite ironic, and it sold for a lot. And in fact, do you know what? Another one on that podcast. Listen, it's worth listening to. Another one worth listening to. I listened to it today. Very interesting. Starts off very bearish. The guest is a billionaire called Jeremy Grantham. He's from the UK. He's a billionaire. I didn't know he's based in America. CBE investor, co-founder, chief investment strategist of Grantham, Mayo and Van Otterloo. Boston-based asset management. 118 billion assets under management. And he goes through all the metrics. The US is basically saying it's in a bubble. The real estate, the stock market's nuts. It's more expensive than it's ever been. Bonds as well. And he goes on with this. He sidestepped major corrections in history: Japanese market crash '89, tech bubble of 2000, and the great financial crash of 2008, because he saw these things happening, and he's willing to sit out, for a couple of years if he has to, because he realises he can't get the timing right. But he says now we're in a bubble and backs up with massive stats. It's very scary until he comes to the end. And it's the US mainly. The rest of the markets around the world are not that overly valued, and in fact, you may even get a rotation in investors from the US to other markets if it starts to crash in America, because it is crazy in America. But and the thing is, when you're in that kind of bubble environment, no one sort of recognises it, or people justify it in so many different ways. Like, it's different now, it's different this time. Like the internet changed our lives. Like blockchain will change our lives, of course. But when you've got companies valued at ridiculous valuations, billions, hundreds of billions, with no revenue, it doesn't make any sense. You can't value. If they're going to raise money to expand the business, and you walk into a bank and say, "Oh, I want to raise $1 million. We're valued at the moment at 60 billion," and so what do you got? Well, I've got a picture of a dog on a coin. It's digital. The coin's not real, but it's digital. And Elon Musk is pumping us. Well, serious investors not going to give you money for that. So I don't know. It's going to pop somewhere, boys. But,
Yeah.
In the meantime, have fun with it because you can make a trade and make money on it. Like I said, I made 100. My Coinbase account could go up by 190%. It's only chunk change. Yeah. It's only chump change, but that kind of rise is not sustainable. I'd be happy if it was, if I could keep doing that, but it's not sustainable. It's outside the accepted norms of returns on investments. It doesn't happen. Everything reverts to norm in the end. It will pop.
Yeah.
Then it's time to go looking through the dust and seeing, okay, what can we pick up here? Maybe buy Bitcoin at $5,000. Maybe that's fine. Maybe $100. I don't know.
Was that the one you were recommending to us a few weeks ago?
No, Alchemy Pay was the one. No, just based on charts and on moving averages. That's all. I'm saying it's in small uptrends. So I was buying when it was it's starting to build an uptrend, and I bought there. I'll show you the chart there. I bought maybe it's 60% in a weekend. I wasn't feeling very well, so I was just staring at the screen. But so
I think that's the bit for me that makes it unappealing. The fact that it's 24 hours a day. Like, that just seems exhausting.
Yeah, it is.
Having to stay on top of it and be aware of that thing all the time. I quite like the fact that the market shuts at whatever time it shuts. Yeah,
that's why. I'll send you a video of this guy who just it's hilarious. Did you see that? I WhatsApped it. This Australian guy talking about getting obsessed with scissors NFT.
Yeah,
so I don't know what's going on, mate. It's scissors. And normally I go in my room and splash some water in my face. I don't know what's going on, but I've got to buy these scissors, and they're like with $40,000, and I don't know what's going on. This is insane. This is a definition of insanity.
Yeah,
and yet. So that's why crypto traders, like I said, the 24 hours a day, they don't get any sleep. They're delirious. They're deluded.
Yeah,
it's too much, isn't it?
Yeah, it's too much.
Just everyone needs to calm down on this.
Talking about that, probably we've had too much in the podcast, I think.
We probably have, yeah.
Yeah,
an hour ago.
I'd have turned off 20 minutes ago.
It's normally because it's odd really because the big talker is not here, Steve.
Yeah, he's not here.
Yeah, right. Yeah.
We've managed to fill without him.
Yeah.
What are we doing this weekend, lads?
I can't go. I can walk the dog early in the mornings. That's the rules.
Oh yes,
and
that's
then I
Not done at all.
Yeah, I can't go out then. I'm going to test myself every day though.
Okay.
I mean, on COVID, not on just generally maths and English.
And stuff.
Yeah.
Oh, okay.
Cool. All right, lads. By the way, one last thing. I've mentioned Escape Hunt. Did you see?
Yeah, well done.
Did you see Escape Hunt? Oh, I didn't mention it once, but did you see Escape Hunt now for all 10 of its sites that's been around for longer than a year? That's the qualification. But they've achieved a certain status on TripAdvisor that puts them in the top 10% of any theme, sort of adventure, leisure activity in the world. So 5-star rate, you've got to get, I think, 90% 5-star ratings. And they've got that on 10 of their sites that's been open for longer than a year. So that's good, and that drives traffic even further. And I know they're very, very busy at the moment. Very busy.
Good.
We should probably go and do one at some stage, shouldn't we?
Yeah, we should.
Yeah. Well, last time I did one with the family, just really stressful. We're just shouting at each other from different parts of the room, twisting, dragging, everything that moves. We just stop doing that. We're doing it in sequence. And they're all Fred and Monty pressing, banging things, kicking things, twisting things. Stop it! Stop! I didn't tell you. I lay on the floor at one point. I had to start breathing properly.
Yeah.
I was just so stressed out. We're not the kind of family that can do that. So,
No.
Especially we are. But you could go with a cool analytical brain, and our family's not like that.
I think we'll be okay.
Yeah, okay, yeah.
Yeah.
All right.
Okay. Yeah, have a nice weekend. Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.